next one is 2.1. To the Ministry of Communications and Transport Steering Committee, the Namibia approved plans for records purposes only. And 2.1.5, source and provide all experts and expertise. And 2.1.6, complete the construction stage within the project time. And the status as at December 2024, no documentary evidence was availed to show that the concessionaire shared plans to develop the dry port with the ministry. Under 2.1.7, provide maintenance services in order to keep the inland port facilities, dry port, in running condition throughout the concession period. Again, status as at December 2024, no documentary evidence availed to show that concessionaire provided maintenance service on the condition of the dry port facilities with the ministry. Under 2.1.10, share with the government the Zambia Port Authority once established all relevant data available with the concessionaire in terms of finance, volume of traffic, etc. upon government's requests. Under the status as at December, the Zambia Ports Authority has not been established at the time of audit in August 2025. There was no evidence that was availed to show that the concessionaire shared relevant data available in terms of finance and volume of traffic with either the ministry or any other relevant government authority. In this regard, the completeness of the income due from the concessionaire during the period of operation could not be independently verified. Then on page 5, 2.1.12, provide at no cost shared transit office facilities for the following government agencies such as the Zambia Police Service and Namibia Police Service, the Government Road Transport Agencies, Revenue Authority, Customs and Excise Department, etc. The status as at December 2024, further review of the operations of AUFS/AUC revealed that the concessionaire was operating from building whose ownership could not be established as at 31st December 2024. Management comment. The observation by the auditors is well noted. You may wish to note that the failure by the concessionaire to fulfill its contractual obligations was one of the reasons the Memorandum of Understanding between the Government of the Republic of Zambia and the concessionaire was terminated. Consequently, the lease agreement over the same dry port facility between NAMPort and UFS was also terminated in July 2023. Following this development, the government appointed Zambia Cargo and Logistics Limited to develop, operate and manage the dry port facility and immediately commenced its operation in September 2024. Since Zambia Cargo commenced full operations at the Zambia Dry Port in September 2024, the company has handled a total throughput volume of 6,210 TEUs, equivalent to 155,250 metric tons as of 30th September 2025, compared to 586 TEUs, equivalent to 14,650 metric tons in 2024. This represents a 960% year-on-year increase in throughput. In terms of revenue, a total of $375,345 was generated for the period January to September 2025, reflecting a 491% increase compared to the $63,456.65 end between January and December 2024. The next query is on unsettled port rental charges accumulated by previous concessionaire. Just at the bottom of page 5, Chair, further, clause 6 of the agreement between the government of the Republic of Zambia and the AUFS provided that the concessionaire shall hand over the assets free from any liabilities, debt, pledge, or encumbrance. However, a review of financial records revealed that at the time of termination of the concession on 25th July 2023, AUFS was owing the Namibian Ports Authority amounts totaling $1,636,301.40, which in Namibian dollars is 29,453,424.80, which it accumulated during the period of the concession. Management response. Chairperson, the observation by the auditors is well noted. However, you may wish to note that the Namibian dollars 29,453,424.80, which is equivalent to 40 million kwacha, 486,354.65, was paid by the government of the Republic of Zambia to Namport in 2024 for port rental and utility arrears. The ministry has since instructed the Ministry of Justice to commence the debt recovery proceedings against AUFS/AUC to recover the port rental and utility arrears that was paid on its behalf. To this effect, on 13th October 2025, the Ministry of Justice, through the Ministry of Foreign Affairs and International Cooperation, served the demand letter to AUFS/AUC. The Ministry awaits a response from the former concessionaire. See Appendix 3. The next query is unremitted concession fees. According to the documents availed for audit, the concessionaire, through a third-party company named African Union Cargo Zambia Limited, paid to the government of Zambia a total of $103,893.43 as 2% of annual turnover for the period from 2012 to 2020. However, it was observed that the concessionaire did not remit concession fees for periods ranging from 2009 to 2011 and 2021 to 2022. Further, there was no evidence to confirm if the concessionaire produced and submitted to the government of Zambia audited financial statements to confirm the accuracy of the remitted concession fees. Management response. Chairperson, the observations by the auditors is well noted. However, you may wish to note that, as indicated in 2 above, the Ministry has instructed the Ministry of Justice to commence the debt collection proceedings against AUFS/AUC and recover the Namibian dollars 29,453,424.80, which is equivalent to kwacha 40,486,354.65, which was paid in 2024 for port rental and utility arrears. In the same letter, the Ministry of Justice was also instructed to collect the 2% retainer fees for the years 2021, 2022 and part of 2023 on a pro rata basis. On 13th October 2025, the Ministry of Justice, through the Ministry of Foreign Affairs and International Cooperation, served the demand letter to AUFS/AUC. The ministry awaits a response from the former concessionaire. See Appendix 3. The next query is an authorized transfer.
The acting PS, you can take some water.
Thank you, ma'am. The next query is an authorized transfer of lease to a third party. On 29th December 2017, AUFS wrote to the government of Zambia requesting that the lease agreement be transferred to African Union Cargo Zambia Limited. It was, however, observed that African Union Financial Services Private Limited transferred its lease agreement rights and obligations to African Union Cargo Zambia Limited without consent of either the Zambian government or Namibian Ports Authority. Management response. Chairperson, the observation by the auditors is well noted. However, you may wish to note that AUFS had abrogated the lease agreement by transferring to the third party, AUC, without the consent of the Ministry of Transport and Logistics and NAMPORT. AUFS abrogating the MOU was the main reason for the termination of the MOU in July 2023. Particularly failure by the concessionaire to fulfill their responsibilities related to port development, as well as transfer of the lease agreement to a third party, namely AUC. To this effect, government appointed Zambia Cargo and Logistics Limited to develop, operate and manage the dry port facility. See Appendix 2. The next query is unconfirmed existence of African Union Financial Services Private Limited. A further review of a letter from the Namibian Ports Authority, sorry Chair, I think it's the next paragraph. However, management at the Ministry of Transport and Logistics could neither confirm the existence of the company nor confirm the liquidation as at the time of audit. Management response. Chairperson, the observation by the auditors is well noted. However, you may wish to note that the ministry has established through the Office of the President Special Division that AUFS/AUC that there are no official documentation indicating any possible liquidation of the company. It should be noted that AUFS/AUC are also actively operating in the Democratic Republic of Congo, DRC, and Namibia. Refer to Appendix 4, a letter from the Office of the President Special Division. The next query is irregularities in management of unsettled port charges accumulated by the previous concessionaire. A review of financial records revealed that as of December 2024, the Ministry of Transport and Logistics paid an amount totaling kwacha 40,486,354.65, equivalent to US dollars 1,531,965.92 and Namibian dollar 29,553,424.80 to the Namibian Ports Authority towards liquidation.
It's actually 453. according to this document, unless you have made a correction.
On the 29 million?
Yes.
29,453,424.80. Sorry about that, Chair. Towards liquidation of the outstanding rental arrears owed by African Union Financial Services Private Limited, with the understanding that the money would be recovered from the concessionaire. However, the following were observed: loss as a result of liquidating utility bills on behalf of African Union Financial Services Private Limited. A comparison of the concession income against the outstanding bills paid on behalf of African Union Financial Services Private Limited result in a net loss to the Zambian government in amounts totaling $1,428,072.49. Net loss due to liquidation of utility bills on behalf of UFS. The first one is the utility bills accrued by UFS at the time of termination, now settled by the government. $1,531,965.92. Then the amount concession fees received by government over 14-year period of dry port operations by AUFS. $103,893.43. The net loss from concession fees against utility bills paid, $1,428,072.49. As can be seen from the above, this was contrary to clause 6 of the MOU, which provided that the concessionaire shall hand over the asset free from any liabilities, debt, pledge, or encumbrance. The next query under that is failure to claim refund. On 12th February 2024, the Ministry of Transport and Logistics wrote to the Ministry of Justice to commence the debt collection proceedings against AUFS in order to recover 40,486,355 or Namibian dollars 29,453,424.80 equivalent, paid by the Zambian government in respect of outstanding rental charges accumulated by the concessionaire. In this regard, the Ministry of Justice engaged the Ministry of Foreign Affairs and International Cooperation to assist in serving the demand letter, but has not received feedback. As at 31st August 2025, the Ministry had not received refund from the African Union Financial Services Private Limited. Management response. Chairperson, the observation is duly noted. You may wish to note that the Ministry has since had several engagements with the Ministry of Justice in an effort to recover the utility fees that were paid by the government. This position is evidenced by the series of correspondence exchanged between the two ministries. Furthermore, on 13th October 2025, the Ministry of Justice confirmed that a demand letter had been served on AUFS/AUC through the Ministry of Foreign Affairs. The matter remains under active consideration and the recovery process is ongoing to ensure that the government is reimbursed for the utility fees incurred. The next query, Chair, is failure to develop and construct port facilities. Last paragraph on page 10. However, a physical inspection of the port facility conducted in July 2025 revealed that although the concessionaire was the concession was terminated in July 2023, 14 years after it was operationalized, the concessionaire did not undertake any development of the port facility. Management response. Chairperson, the observation of the auditor is well noted. However, you may wish to note that AUFS had abrogated the lease agreement by transferring to the third party, AUC, without the consent of the Ministry of Transport and Logistics and NAMPORT. AUFS abrogating the MOU was the main reason for the termination of the MOU in July 2023, particularly failure by the concessionaire to fulfill their responsibility related to port development, as well as transferring of the lease agreement to a third party, namely AUC. To this effect, government appointed Zambia Cargo and Logistics Limited to develop, operate and manage the dry port facility. You may wish to note that since Zambia Cargo commenced full operations of the Zambia dry port in October 2024, Zambia Cargo handled a total throughput volume of 6,210 TEUs, equivalent to 155,250 metric tons, as at 30th September 2025, compared to 586 TEUs, 650 metric tons in 2020, which represents an year on year. A total of 340 was generated from 5 to September 2025. This revenue performance 1% increase year on year, having earned a total of $400.65 between January 2020 and 2025. The next query, Chair, is on our and the first one is contract for supply, delivery and installation of one computer to plate machine for government printing department. The contract for supply, delivery and installation of one computer to plate machine for government printing, and the query Chair, I would read the query starting from page 12 in the top paragraph. On 21st February 2025, the Ministry and Kalidec Private Limited signed the contract for a sum of 4,576,000 kwacha, equivalent to South African rands 3.2 million, converted to kwacha at 1.43 kwacha per rand. The contract terms and conditions included, among others, the following: delivery period of 4 months from date of contract signing. Contract shall come into force upon of the shall be made in kwacha equivalent within 30 days on supplier's request, supported by an invoice and client acceptance, and that payment should be, and provision of performance security by the supplier in the form of bank guarantee stroke bond of up to 1 million kwacha in Zambian kwacha. The following were observed: 1. Questionable payment of 50% advance before contract signing. Section 70, subsection 3 of the Zambia Public Procurement Act number 8 of 2020 states a decision to award a contract by the approvals authority shall not constitute a contract. Further, clause 38.1 of the general conditions of contract states the contract shall come into force upon contract by the parties. Contrary to the Act and clause, a review of financial records reveals that on 16th December 2024, the ministry made a 50% advance payment amounting to kwacha 2,000,000 or the equivalent 700 signing date of 21st February 2025 and delivery of the machine. Management response. Chairperson, the observation by the auditors is well noted. You may wish to note that the ministry had obtained authority from the Zambia Public Procurement Authority to pay 50% of the cost, a mandate confirmed in minute number ZPPA/101/14/320 dated 15th November was deemed because our government printing department was previously relying on costly subcontracting for plate making and the existing equipment was frankly obsolete and unserviceable. This equipment had to be urgently procured to enhance productivity and, more importantly, mitigate a major national security risk, as the inability to print highly classified and special constitutional assignments due to equipment failure posed a significant threat to confidentiality. Furthermore, the payment was made on the premise that the local purchase order issued after the Ministerial Procurement Committee selected the supplier served as the binding contract in the absence of the main document. This swift action was also necessitated by the looming financial year end on 31st December 2024, after which, as per the well-known Treasury and Financial Management Circular number 1 of 2025, Rule number 5.19, to controlling officers, those funds would have been mopped up by the Treasury, a situation we were keen to avoid given the critical nature of the purchase. See Appendix 5. The next query, Chair, failure to seek authority from the Attorney General. Contrary to the regulation, there was no evidence to confirm that the ministry obtained relevant authority before entering into an international procurement agreement. Management response. Chairperson, the observation of the auditor is well noted. However, you may wish to note that the authority to proceed with the procurement was sought from the Attorney's Office, and guidance to proceed with the said transaction was granted through minute number MOJ 101/7/2 dated 30th December 2024. Further, it should also be noted that this action was necessitated by the fact that government accounts were closing at the ending of the financial year, avoiding funds to be mopped up by the Treasury. See Appendix 6. The next query is on the contract for supply of pontoon rehabilitation materials under Pontoon Services Program. On 27th February 2025, the Ministry engaged Minov Trading Limited for the supply of various pontoon rehabilitation materials at a total contract price of kwacha 1,868,254 at 4% business turnover tax inclusive, with a delivery period of 2 to 4 weeks from date of contract signing. The contract terms and conditions included, among others, the following: 25% advance payment of the total contract sum, insurance cover of all goods against loss or damage incidental to manufacture or acquisition, transportation, storage and delivery, warranty period of 1 year, provision of advance payments, security and performance security by the supplier in the form of bank guarantee or bond up to 1 million kwacha. The materials were intended for use on rehabilitation of 3 damaged pontoons with multiple leakages stationed at Watopa, Besuma and Lukulu water crossing points. The scope of repair works included the following: rehabilitation of leaking floaters and ramps, repair of ground rail, fabricating inspection leads and chambers. The following were observed: 1. Irregular payments to supplier before contract signing. Section 70, subsection 3 of the Zambia Public Procurement Act number 8 of 2020 stipulates a decision to award a contract by the approvals authority shall not constitute a contract. Clause 38.1 of the General Conditions of Contract statement states the contract shall come into force upon signature of the contract by the parties. Contrary to the Act and contract terms, a review of financial records revealed that on 31st December 2024, the Ministry irregularly paid kwacha 1,843,217 to the supplier before the contract signing date of 27th February 2025. Management response. Chairperson, the observation of the auditors is well noted. However, you may wish to note that the Ministry could not sign the contract as the Ministry was waiting for the clearance of the draft contract from the Attorney General's office, which was granted on 24th February 2025, and the contract was signed on the 27th of February 2025. Chairperson, as can be observed, the payment was done on 31st December 2024, which was the last day of the closure of accounts for the year ended 31st December 2024, failure to which the funds would have been mopped by the Treasury, as retention is not allowed as per the Treasury and Financial Circular number 1 of 2025 to controlling officers under Regulation 5.19 retention of funds. Further, the chairperson may also wish to note that the payment was made on the premise of the local purchase order which was issued and acts as a binding contract in the absence of the main contract after the Ministerial Procurement Committee was granted. Attached is the minute from the Attorney General's office and the minute that was sent. Management will ensure to adhere to the procurement procedures. See Appendix 7. Failure to repair pontoons. Chair, in summarizing this one, an inquiry with management and review of records revealed that the ministry received all the procurement materials for the rehabilitation of pontoons on 3rd January 2025 and distributed them as follows. There was a distribution from Besuma pontoon, Folokulu pontoon and Watopa pontoon, the 3 pontoons that were supposed to be repaired from the materials that had been bought. The query is that, however, as at 15th July 2025, the 3 pontoons had not been repaired and were being used to ferry people, whilst with multiple damages such as broken guardrails, leaking bases, leaking floaters and ramps, and damaged leads and chambers, thereby posing a danger to the public. See pictures below. Management comment. Chairperson, the observation by the auditors is well noted. However, you may wish to note that the process of repairing has been completed at Besuma and Lukulu, has been done. Currently, Watopa pontoon is being worked on. Further, the chairperson may wish to note that the delay was as a result of the crane truck that developed a mechanical fault. The pontoons are ready for verification. The next query is Management and Support Services Program. The query is on the failure to remit deducted pay as you earn to ZRA. Contrary to the Act, amounts totaling kwacha 602,803 deducted as pay as you earn from 25 officers were not remitted to Zambia Revenue Authority. Management response. Chairperson, the observation by the auditors is well noted. You may wish to note that the ministry delay in remitting the pay as you earn was as a result of insufficient funding. The ministry had relied on the treasury funding for the personal emoluments from which we were to settle all the pay as you earn due to Zambia Revenue Authority. But the funding was not done until 2025. The current status of the pay as you earn is given in the table below. Chair, we've attached a table that shows that we've made the payments for all the 25 members of staff. Furthermore, Chairperson, management wishes to assure the committee that measures have been put in place to ensure that all statutory obligations are paid immediately. Deductions are done as the way forward. This is to enhance timely remittance of statutory obligations and avoid the recurrence of such delays, and to ensure that the ministry remains fully compliant with the provisions of the law. The payment voucher plus the transmission copy are available for audit verification. See Appendix 8. The next query is on allowances and interest management. Irregular payment for accountable interest. The query is that further a scrutiny of invoices issued by the supplier revealed that the supplier charged total VAT amounting to 14,888. However, a search at the Zambia Revenue Authority website revealed that TPIN number 100-761-6493 was registered in an individual's name of Gleiman Mwenge and not on the Edge General Dealers. Therefore, the VAT charge of 14,888 claimed by and paid to the supplier was irregular. Management response. Chairperson, the observation by the auditors is well noted. You may wish to note that at the time of paying accountable imprest, the ministry had to buy snacks and refreshments for 53 officers who were working on the preparation of the midterm budget framework for 2025. The expenditure was necessitated by the time constraint, which meant officers to work over the weekend, making it difficult to use food and refreshment. On the irregular VAT charge of 14,888 claim, wish to note that the supplier was supposed to cancel VAT on the invoice and replace it with turnover tax. That has since been paid back by the supplier. Receipt and deposit slips are attached as Appendix 9. Holding of workshops without cabinet authority. Contrary to the circular, amounts totaling kwacha 728,004 kwacha involving 7 transactions were paid for using private conference facilities to hold workshops and meetings without authority from the Secretary to the Cabinet. Management position. Chairperson, the observation by the auditors is well noted. However, you may wish to note that the Cabinet authority for the 6 of the 7 cited meetings are available for verification, audit verification. The status are summarized in the table below. Further, the Chair may wish to note that the Ministry did not need to obtain Cabinet authority for the meeting held at Mlungushi International Conference Center, which is a government conference facility as observed by the auditors, and the meeting was for the Tazara concession negotiations within the Lusaka district. See Appendix 10. So, Chair, in summarizing the table, the meeting on 19th December 2024 was at Mika Convention Center. The Cabinet authority is available. The cost of payment was 59,482,000.76. For the meeting for 20th November 2024.
You can skip the table.
Thank you, Chair. The next query on page 21 is payroll management. Non-compliance with disciplinary procedures regarding absenteeism without leave. Section 63, subsection A of the Terms and Conditions of Service for the Public Service states, an officer who is absent from duty without leave to do so for a continuous period of 10 days or more working days shall be liable for dismissal. Further, Section 18, subsection A of the Disciplinary Code and Procedures for Handling Offences in the Public Service of 2023 states, a dismissal is when an employee on final warning commits another offense or for the first time offense of absenteeism for a period of 10 days or more, of 10 or more days. During the period under review, 4 officers were absent from duty for a continuous period of more than 10 working days without leave between 15th July 2023 and 18th December 2024. Despite the provisions, the concerned officers who had already received final warnings were issued additional warnings instead of being dismissed as required by the above regulations, and were paid salaries in amounts totaling kwacha 300,866. Management position. Chairperson, the observation by the auditors is well noted. However, you may wish to note that management acknowledges the lapses in the timely dismissal of officers from employment for the offense of absenteeism in accordance with the laid down procedures. Further, Chairperson, you may wish to note that the 3 officers out of 4 officers, namely Mr. Kawana Muchindu, formerly machine operator, Mr. Kanungwe Mupuka, former machine operator, and Mr. Chiwaya Chilongu, former machine operator, have since been dismissed from employment. The ministry managed to recover the total sum of 61,033 kwacha.73 from the 3 officers' leave terminal benefits and NAPSA. And NAPSA has been engaged to recover the balance of kwacha 241,515.89 from their pension contributions. A copy of the letter sent to NAPSA in June 2025 is available. In addition, the chairperson may wish to note that the recommendation letter for the dismissal of the 4th officer, Mr. John Zimba, Registry Clerk, has been submitted to the Public Service Management Division, and the ministry is awaiting a response. His salary was blocked following his absence from duty without authority for more than 10 consecutive days. Therefore, the recovery of the erroneously paid salary to Mr. Zimba, amounting to 25,316.38 kwacha, will be done once directives for his dismissal are received. The chairperson may wish to note that the ministry has enhanced disposal of outstanding disciplinary cases and has instituted measures of blocking salaries once reports of absenteeism cases are received. See Appendix 11. Officers in integrated default positions. According to the Payroll Management and Established Control PEMIC, integrated default position 9999999 is a position that is automatically created on the system when one is terminated or separated from the payroll. In addition, an integration default position is a non-refunded position created on the system to maintain employees who have since separated from the public service by way of either retirement, death, resignation, dismissal, or unpaid leave, meant to return the separated employee on the system for record purposes only. During the period under review, it was observed that there were 2 officers occupying integrated default positions and were paid salaries in amounts totaling kwacha 45,027 as at 31st December 2024. Management position. Chairperson, the observation by the auditor is well noted. However, you may wish to note that two officers, namely Mr. Sylvester Nonde, former administrative officer, and Mr. Galasinio Chipepa, former senior office orderly, were placed in integrated default positions following their resignation and retirement from the civil service with effective from 5th July 2024 and 18th February 2024 respectively. Their placement on integrated default positions signifies their termination from payroll following their separations, as evidenced on the attached extracts from the payroll system. However, the ministry wishes to clarify that after further analysis and recomputation, the overpayment amount to both officers is kwacha 10,309.06 as opposed to the 45,027 as reflected in the Auditor General's report. See the table below. Chairperson, you may wish to note that Mr. Nonde's June 2024 salary was erroneously withheld on account of immediate resignation. However, when the ministry noted that the officer had given prior 3 months notice of resignation, his June salary arrears were paid to him at the time he was terminated, as reflected on his attached July 2024 payslip. See appendix. The ministry, however, regrets the 2 months delayed termination of Mr. Chipepa from the payroll and the July 2024 transport allowance paid to Mr. Nonde, which resulted into the stated overpayment. Further, the chairperson may wish to note that the amount overpaid to Mr. Chipepa was 8,580 kwacha 0.16, whereas that of Mr. Nonde was 1,728.90 kwacha, bringing the total amount overpaid to both officers to 10,309.06 kwacha. The ministry has since fully recovered the overpayment of 10,309.06 kwacha from the officers' leave terminal benefits. See Appendix 12. I submit, Chair, for your consideration.
Thank you so much, Acting PS. We break for 5 minutes for a health break. We'll come back and start asking questions. I lift your immunity for the break. All right, members, we come back after 5 minutes so that we continue the questioning.
Transform your office, retail, or branch space with DSTV for Business. Add top entertainment at great value with one of our DSTV work packages, the Ultra or Essential, and create a welcoming and informative setting with cutting-edge news, business, sports,